So guys, what's up, welcome back to the channel, and we are back with a super amazing revision video of the chapter deposits. And in this lecture we are going to cover the entire chapter of the deposits, covering all the concepts in very detailed manner, and you are going to love it. You are going to love it. You have to understand the topics very thoroughly, and you are going to study very thoroughly with me. Let's start the chapter of deposits, and we are going to start the revision of deposits. Every topic will be covered, and yes, if you want these notes, you have to go to the Telegram channel link is there in the description, and you can go to the Telegram channel. You will find these notes and just revise the chapter with these notes only. You will be able to learn it very easily. Your entire topics will be covered with these notes also, and with this revision lecture also. In case you have any doubt, you can comment over here in the comment box, or you can DM me in the Telegram also. Right, sir. And if you are new at the channel, then you have to subscribe to the channel, so that you will be getting all these content and strategy and motivation, everything which is required for your attempt. You will be getting everything on this channel, so you have to subscribe the channel. And before starting the lecture, just hit the like button, and let's start the revision of the chapter deposits. But firstly, I'll tell you some basic things about deposits and everything related to that deposit, so that you will be able to understand it very easily. Sir, what is the comparison? What is the difference between debenture and deposits? If I'll talk about the debenture and deposits, how they are different from each other. If you will say that debentures and deposits, how they are different. So debenture is issued for a comparatively longer period of time, but deposits, they are also considered as the borrowing, but they are for the shorter period of time. The maximum tenure of the debenture is 10 years, but whereas the maximum tenure of the deposit is 36 months only. The debenture is governed by section number 71 of the Companies Act, read with the relevant rules made thereunder, and the deposits is governed by the section 73, 74, 76, 76A, as well as the rules made thereunder. And whether we need to pay interest on debentures, sir, yes, we have to pay the interest on the debentures, but we have to pay the interest on deposits also. We have to pay the interest on deposits also. Whenever an investor invests into the company by the way of debenture, the company will issue the debenture certificate to that investor. But in case of deposits, when the investor gives the funds to the company for the purpose of deposit, when the company accepts deposit from the company, when the company accepts deposit from the investor, then the company has to issue the deposit certificates to the investor. Got it, sir. So basic, if I'll talk about the differences, that debenture is also a borrowing, deposit is also a borrowing, but debenture is a borrowing for a longer period of time. Deposit is also a borrowing, but comparatively for a shorter period of time. And the tenure here is 10 years, here the tenure is 36 months. Now we will understand that which company can issue, which company can raise deposits from the public, which company can raise the deposits from the members. If I'll talk about that company is a private company, first we talk about the private company. If it is a private company, then private company can accept deposit from the public? No, because as per the definition of private company, section 2 clause 68, private company cannot invite the public for anything. They cannot come up with the public issue of anything. They cannot come up with the public issue of shares, of debentures, anything. They cannot come up for public issue. But private company can accept deposit from the member? Yes, private company can accept deposit from the member. Sir, whether public company can accept deposit from the public, we have to check whether it is an eligible public company or not. If it is an eligible public company, then yes, it is allowed. You can accept the deposits from the public. But if you are not an eligible company, then you cannot accept deposit from the public. Sir, whether public company can accept deposit from the member? Yes, whether it is eligible public company, whether it is ineligible public company. So I'll say simply, if you want to raise deposits from members, then any company can raise deposit from the member. And for that, section 73 is applicable. If you will raise deposit from the members, section 73 will be applicable. But if you will raise deposits from the public, then section 76 will be applicable. But which company can accept deposit from the public? Only and only eligible public company, not all public companies. Only eligible public company can accept the deposit from the public. Sir, then you should tell us now, what is eligible public company? What is the criteria to be the eligible public company? So if I'll talk about eligible public company definition, here it is the criteria that eligible public company means a public company. It should be a public company, and the net worth should be greater than or equal to 100 crore, or turnover should be greater than or equal to 500 crore. Because or is written, you have to satisfy any of the criteria. You need not to satisfy both the criteria. Either your net worth is 100 crore or more, or your turnover is 500 crore or more. But here and is written. So it means whatever I am telling you, that in condition 1, two options are given to you. Either you fulfill this criteria or you fulfill this criteria. But along with that, you have to pass a special resolution in the general meeting. If you want to raise the deposits from the public and you are an eligible public company, you have to pass a special resolution in the general meeting, and that resolution must be filed to the ROC. But one more thing you have to remember, that if if it is like that, there is a limit which is given under section 180 subsection 1 clause C, that is paid up share capital plus free reserve plus security premium account. If your existing deposits plus your proposed deposits, whatever the existing deposits right now is outstanding in your financial statements, is showing in your books of account, and whatever the proposed deposit you are going to borrow, that total aggregate amount, if that amount is exceeding paid up share capital plus free reserve plus SPA, this limit is given in section 180 subsection 1 clause C, then only you have to pass SR. So I want to say, if your existing plus proposed borrowing is not exceeding this limit, your existing plus proposed deposits are less than this limit, then there is no need to pass SR. You just have to pass OR. Then OR is sufficient. You just pass the OR, file that OR with the ROC, and that is enough. That is enough. You need not to pass a special resolution. So this is the criteria of eligible public company. In order to be eligible public company, you have to satisfy three conditions. First, either your net worth is 100 crore or more, turnover is 500 crore or more. Any one of the following condition you can fulfill. And you have to pass a special resolution, and that resolution must be filed to the ROC. However, one thing you should remember, that if your deposits amount is not exceeding the limit of 180 subsection 1 clause C limit, that is paid up share capital plus free reserve plus SPA, then in that case there is no requirement to pass special resolution. You can just pass ordinary resolution. That is sufficient. Got it? Got it, sir. Then I'll come to section 73 and section 73 subsection 1 says that whenever any company invite, accept and renew the deposits from the public, then it is to be done as per the manner given in chapter 5 of the Companies Act. If you want to accept deposit from the public, you can accept the deposit from the public. But in order to accept deposit from the public, you have to fulfill the conditions which are given in section 76. That is manner given under chapter number 5 of the Companies Act 2013. However, these rules, these deposit sections and everything, this will not be applicable to a banking company. If a banking company is accepting deposits from the public, it is the by default operations of the banking company that they generally very frequently on a daily basis they accept numerous deposits from the public. Whether they will be complying these provisions and again, no, because they are very frequently accepting deposits from the public. So this law said that the banking company, NBFC, housing finance company or any other company which the CG may specify, on all those companies, these rules will not be applicable. That means when they will be accepting deposits from the public, they need not to fulfill the provisions given under this chapter. Although it is a banking company, Companies Act will be applicable to it. For example, SBI is a banking company. SBI is also a bank. SBI is a banking company. Now, SBI is accepting deposits from the public. Whether SBI need to fulfill the conditions which are given under this chapter? No, because it is not applicable to these companies. So provisions are not applicable to banking company, NBFC, housing finance company, or any other company which is specified by CG in consultation with the RBI. Got it? Got it, sir. So in my words, I say that this is the KK's note, that simply we can say this chapter is not applicable to banking company. This chapter is not applicable to NBFC. NBFC means non-banking but financial company. So I'll say that entire chapter will be applicable on what kind of companies? NBNFC. Like kind of companies which are non-banking, non-financial company. They should not be involved in that financial business. For example, any manufacturing company, for example, like Nestle. For example, any construction company like L&T. For example, like any trading company, you can take a hypothetical example, KK Limited. For example, a service providing company, for example, BB Virtual Private Limited. So these are the companies on which this chapter is applicable. Banking company, NBFC, housing finance company. On these companies, this chapter is not applicable. Now from section 73 subsection 2 onwards, they give the provision for the acceptance of deposit from the member. You have to learn these conditions like they are very important conditions, because the same condition will be applicable when you will accept the deposit from the public. In section 73 subsection 2, conditions are given to accept the deposit from the member. In section 76, which is applicable in case of deposit acceptance from public, in that section also they have written like you have to fulfill the same condition which are given in section 73 subsection 2. Oh, that is why I am saying you have to learn it. because this is very important. Section 73 subsection 2 states that if a company wants to accept deposit from the member, they can accept deposit from the member, but for that they have to pass a ordinary resolution in the general meeting. They have to pass a OR in the general meeting, and they have to comply certain conditions. Sir, what conditions? First condition, you have to issue a circular to all the members. The format of the circular is TPT1, and in that you have to write these statements. These things you have to write in that circular. Sir, what things? First, financial position of the company. Second, the credit rating obtained by the credit rating agency. There are some credit rating agencies in the market who will rate your your company and your securities and everything. They rate that. For example, like there is a credit rating agencies like ICRA. You will find on the website of SEBI. For example, ICRA or CARE, these are some credit rating agency which gives you the credit rating. So whatever the credit rating you have obtained, you have to mention it. Total number of depositors. If you have already accepted the deposits, then how many depositors are there? Existing depositors. What is the amount of previously accepted deposit, that is outstanding deposits? You have to tell that, and other particulars you also have to tell. So all these things you have to state in the circular. And I have given a mnemonic, that is coupon, you have to disclose in the circular. Now, what are the rules related to the circular? That circular must be sent to all the members through registered post acknowledgement due, or you can send through the speed post, or you can send through the emote. However, it is option given to the company that company may publish this circular in the newspaper. That is English newspaper and vernacular newspaper where the registered office of the company is located. But sir, why may is written? Because company is accepting deposits from the members na. So if you are accepting deposit from the member, your option is there. If you want to publish it in the newspaper, you can publish it in the newspaper. If you don't want to publish it in the newspaper, you don't want. If you don't want, then don't publish in the newspaper. Oh, so if you are having any website also, then you have to publish the circular on the website also. Got it? Got it, sir. Then second condition is that you have to attach a certificate from the statutory auditor. You have to attach a certificate from the statutory auditor that that company has not defaulted in the past for principal payment of deposit or for payment of interest on the deposit. Company has not defaulted, never ever defaulted in the past. Or if company has defaulted, then that default got rectified and 5 years from the date of rectification has already been elapsed. If this happened, okay, if default has happened, okay, that default has rectified, the stat auditor will certify that default was rectified and 5 years from the date of rectification has been elapsed. This the certificate that stat auditor will give. Then the copy of the circular and the statement what I told you, you have to send it to the ROC at least 30 days prior to issue for registration by the ROC, and it must be signed by the majority of directors. Then the fourth condition is that if you need to accept deposits every year, for every financial year, every next year you have to issue fresh circular. It is not like that you issue circulars, you issue circular for once and now you can accept deposit for infinite period of time, infinite period of years. No, it's not like that. If you want to issue deposits, if you want to raise deposits again and again, you have to issue fresh circular again and again in every financial year. So why you are saying financial year? Because later on I'll tell you that there is a period of validity of circular. So you will get to know that if you will issue the circular right now today itself only, that will be applicable for a longer period of time. So eventually your next financial year will come. So you will see that. Company may provide the security. Yes, that is very important point, because this point makes you clear that the company can accept secured deposit as well. Company can accept unsecured deposit as well, because here the word may is written. Company may provide the security. So it is not mandatory that you have to issue secured deposits only. You have to raise secured funds only. No, you can raise the unsecured deposits as well, because here the word written, company may provide the security for due repayment of deposit amount or interest. But you should learn one point I am telling you, that is very important point. If deposits are secured, then the trustee appointment is mandatory, because if the deposits are secured, depositors are so much in numbers, so many depositors are there. So how you will be creating security in favor of them? You will be giving the gate of building to someone, wash basin to someone, and door to someone, like windows to someone. You will be creating security like that? No. So how you will be creating security in favor of all those depositors? You have to appoint a trustee, and in the favor of trustee, the security is created. So trustee appointment is mandatory. Now you understand one more point, that if deposits are secured, then they are secured deposit. But if deposits are partially secured, it will be considered as unsecured deposit. Sir, what do you mean by partially secured? Partially secured, I want to say that the deposit security should cover the entire principal amount also and the interest amount also. For example, I'll tell you, for example, let's say company has raised deposits of rupees 100. Take a small value example. Company has raised deposits of rupees 100. And for 3 years, company has taken this amount. Now, let's say the interest rate is 12%. So for first year, interest is 12 rupees. Second year, interest is 12 rupees. Third year, interest is 12 rupees. So total interest will be 36 rupees. Total amount of deposit will be 100 rupees. So in total, it will be 136 rupees. So I want to say that whenever you create a security in the favor of trustee, that security must be equal to or more than the amount of 136 rupees. That security amount must cover the principal amount also as well as the total interest payable also if it is partially secured. For example, like I have created a security of an asset and the value of asset is only 110 rupees, then my security is not sufficient. So my deposit will be considered as unsecured deposit because it is partially secured now. It will be considered as unsecured deposit. Oh, yes. And the other one very, very important point, that company has to deposit on or before 30th day of April every year a sum of at least 20% of the amount of the deposits maturing during next financial year. And that reserve will be called as a deposit repayment reserve. Sir, give us an example. For example, the financial year 23-24 is going on right now and the next financial year is 24-25. So in the next financial year, let's say on 14th of February 2025, that is very auspicious day. That auspicious day, on that day, the deposits are going to mature for rupees 200 crore. If the deposits maturity amount is rupees 200 crores, so in this financial year, on or before this 30th April, that is 30th April 2023, on or before this date, 20% of this amount, that is 40 crore rupees, at least you have to create a reserve, that is deposit repayment reserve. Sir, in this year also they are maturing the deposit of 100 crore. So yes, out of this, for this 100 crore, the 20%, that is 20 CR reserve has been already created in the preceding financial year, 30th April. So this is how you have to create a DRR every year. Oh. Now I am going to tell that very, very important point, the condition A, B, C and F. Whatever I have said earlier, this condition A, that issuance of circular. Condition B, that certificate of stat auditor. Condition C, that circular sending to the ROC. And condition F, this deposit DRR. Deposit DRR, deposit repayment reserve, or you can say simply DRR. These 4 conditions are not applicable to these 3 private companies. If a private company is a startup, and it is in initial 5 years of its incorporation, that is from the date of incorporation 5 years has not been elapsed, in that case these 4 conditions will not be applicable. It is a kind of privilege given to these kind of private company. Or if it is a private company and accepting deposit from the member equal to or less than the 100% of aggregate of paid up share capital plus free reserve plus SPA. If you are accepting this much amount only, then you need not to fulfill those 4 conditions. You are exempted. And the third exemption is itself giving you 3 conditions. That the conditions will not be applicable to a private company if that private company fulfill all these 3 conditions. First condition, that private company should not be associate or subsidiary of any company. That private company's borrowings from bank and PFI or any body corporate must be less than the lower amount of twice of paid up share capital or 50 crore. Let me take an example. For example, your paid up share capital is 20 CR. So do twice of it, that will be 40 CR. 40 CR or 50 CR, whichever is lower, that is 40 CR. So this is the lower amount. This is your benchmark. Now you have to check if a private company is like that, who is not associate or subsidiary of any company. They have not done default of, there is no subsisting default of the borrowings of that private company. And the borrowings of that private company must be less than 40 crore in the given example. It must be less than 40 crore. So if all the 3 conditions are satisfied, so we will say that kind of private company can accept deposit without fulfilling those 4 conditions. So there are 3 exemptions given to the private companies. On these private companies, the limit, the conditions which are given in point A, B, C and F, that conditions are not applicable. Got it? Got it, sir. However, when you accept the deposit, you have to file a return of deposits to the ROC in the form number DPT 3. Then I'll come to section 73 subsection 3. It says that Deposit accepted by the company shall be repaid with the interest. You have to repay the interest also as per the terms and conditions decided when you raised the deposits. At that time, the terms and conditions were decided. So according to that, you have to pay the interest, whether it is annually, semi-annually, yearly, whatever it is. Section 73 subsection 4 says that if the company fails to repay the deposits amount or the interest amount, then the depositor may apply to the NCLT. Depositor may go to the NCLT. This company is not paying amount back to us. The company is not paying the amount of deposits back to us, or interest they are not paying. Whatever your complaint, you can go to the NCLT, and for that order, NCLT will issue an order to the company to pay the sums due, or to pay the amount of interest, or to pay the amount of deposits, or to pay the amount of loss or damage that has been caused to the person because of the non-payment by the company. This DRR, what you have created now, it will be reused only and only for the purpose of repayment of deposit. You cannot use it for any other purpose. Institute used to ask this question, like deposit repayment reserve, whether they can use for any other purpose or not. No, DRR can only be used for the purpose of repayment of deposits. This is simple section, that is section 73. But if you will able to cover section 73 now, you will be able to cover section 76 very easily, because it is cut copy paste. It is copy paste, it is nothing. On this chart, I'll come bit later. Let us understand section 76 first. Section 76 says that acceptance of deposit from the public, notwithstanding anything contained in 73. A public company which has a prescribed net worth, prescribed turnover, I already told you. Prescribed net worth, that is 100 crore or more. Prescribed turnover, you say what is prescribed turnover? Sir, it is 500 crore or more. Accept deposit from the public, but that public company also has to comply the condition of section 73. That means you have to comply the section 73 conditions only. Whether you accept deposit from the member, whether you accept deposit from the public, you have to fulfill the conditions what I have already told you. Just there is a very minor change that I'll tell you here. And such public company shall obtain the credit rating from the credit rating agency, and that credit rating must ensure the adequate safety. Means the credit rating agency has given you the rating now. That rating must be like that which ensures the adequate safety, that the funds will be safe. It will not be like D grade rating or like C grade rating. It should not be like that. And the company has to inform the public about the ratings at the time of accepting the deposits. And I told you that deposits tenure is 36 months. So might be possible na, that company will do some bad things in the later years and the ratings may get changed. So for till the tenure of the deposit, for every year you have to take the ratings again and you have to inform to the public. So rating shall be obtained for every year during the tenure of the deposit, and it must be informed to the public. Right, sir. And if the company accepts secured deposit, definitely you have to create a charge, and that charge should be created within 30 days of the acceptance of the deposits. Now, if I'll talk about the condition, the same condition they have given here only. I'll not repeat it again. I'll not waste the time here. The same conditions you have to fulfill. You have to issue a circular. Again, the same information must be contained. Circular must be sent to the members through RPAD, speed post, e-mode, whatever mode you want to use, you can use. But here there is a very big change. Because you are accepting the deposits from the public, not only from the members. So you have to publish it in the newspaper. In that section, you just recall that it was written circular may be published in the newspaper. But in this section, they have written circular shall be published in the newspaper, because you are accepting deposit from the public now. So this is to be published in the English newspaper, vernacular where the registered office of the company is located. Then the circular has to be posted on the website also. If you are having the website, then the same point for the stat auditor certificate, exactly same. Then exactly same, you have to send it to the ROC, exactly fresh circular point, exactly that security point, and exactly that DRR point. Same to same point, exactly. There is nothing changed, nothing new, nothing is different from that section. Every condition you have to fulfill same. This is your section 76. And the date of advertisement in newspaper will be considered as the date of issue of advertisement. The date of dispatch, when you will issue the circular, that date will be considered as the date of dispatch. Got it? Got it, sir. Then I'll come to section 76A. Section 76A states that, sir, that chart is pending. I know. I'll tell you about that chart also. Don't worry. Section 76A states that punishment for the contravention of section 73 or 76. If company accept, invite or allow any other person to accept or invite deposits in contravention to the provision of section 73 or 76 or rules made under this chapter, or company fails to pay the deposit amount or interest amount within the time specified within the tenure as per the maturity, or if the NCLT granted extension to the company and company has not paid the amount even if in the extended time also, then the punishment is given that fine will be applicable to the company minimum rupees 1 crore or twice of the amount of deposit, whichever is lower. This is the minimum fine which will be applicable to the company. But if I'll talk about the maximum fine, it will be rupees 10 crore. It will be rupees 10 crore, and every officer in default will be punishable for an imprisonment up to 7 years. And fine will be applicable on that officer in default also. Fine minimum 25 lakh and maximum 2 crore rupees. Right, sir. Now we will discuss that if it is proved that officer in default has committed the default knowingly, willfully, in order to deceive, in order to do the fraud, in order to do fraud with company, shareholder, depositor, creditor, tax authorities, then such person will be liable under section 447. That is, fraud punishment will be applicable to him. Got it, sir. Now I'll come to section 74 later. Let me tell you that limits also and chart also. In this chart, I have simplified all the limits together. Like what kind of company can accept how much deposit from whom, that chart is given here. So if I'll talk about a non-government company, the non-government company can accept deposits. How? If it is an eligible public company, then they can accept deposit from the member up to 10%, and they can accept deposit from the public up to 25%. Now there might be a question arising in your mind, sir, 10% of what? 25% of what? All these limits are of the aggregate of paid up share capital plus free reserve plus SPA. So with every limit, you have to do 10% of aggregate of paid up share capital plus free reserve plus SPA, 25% of aggregate of paid up share capital plus free reserve plus SPA. Got it, sir. So eligible public, if you are eligible public company, you can accept from the member up to 10% only, not more than that. From public, you can accept only up to 25%, not more than that. Got it, sir. Sir, it means total, this eligible public company can accept total deposits up to 35% of paid up share capital plus free reserve plus SPA. Yes. So sir, whether they can do like this, that they can accept from the members 12% and from the public 23%, because aggregate it will be 35 na. It is not exceeding 35, so it is allowed na? No, it is not allowed. It is not allowed. From members you have to accept up to 10% only. From public you have to accept up to 25% only. Aggregate it should be 35%. It should not be more than 35%. For non-eligible public company in general, now you just understand. Only the eligible public company is the company which can accept deposit from the public. Rest all companies are not allowed na. So that is why you will see that they cannot accept deposit from the public. It's nil. Ille. You cannot accept. But in other companies, if you want to accept deposit from the member, then how much you can accept? So in general, if it is a public company, in general, they can accept from member up to 35%. But if you are a IFSC public company, that gift city in Gujarat, and in that a public company is established. If you are a IFSC public company, then you can accept up to 100% of the paid up share capital plus free reserve plus SPA, because we want to promote them. For a private company, in general, they can accept up to 100% from the members. Up to 100% you can accept. But there are two types of private company which can accept the deposit from the members. Unlimited amount they can accept. Sir, if it is a private company, it is a startup and it is in the initial 10 years of its incorporation, which means that 10 years from the date of incorporation has not been elapsed. And I'll say a private company which fulfill the three conditions, the same three conditions I told you earlier. That private company should not be associate or subsidiary of any company. That private company has no subsisting default of the borrowings. And that private company's borrowings from bank, PFI or body corporate must be less than the lower of twice of paid up share capital or 50 crore. You have to do the twice of paid up share capital, then compare that value with 50 crore. Whichever is less, the amount will come. Your borrowing should be less than this amount. So these three conditions, if you will fulfill, then that private company can also accept unlimited amount of deposits from the members. But one more point you have to remember, that if it is a government company, then government company can accept deposits up to 35%. Here the bifurcation is not applicable. Suppose there is a government company There is a government company and that company wants to accept deposit from the member also and public also. Suppose that is that company is satisfying the criteria of eligible public company also. That is a government company and that is a eligible public company also. So that company wants to accept deposit from the member also and public also. So can they do like that? From the member they can accept 12 and from the public they can accept 23 because total will be 35. Now you will say no. Answer is yes. You can accept like this because for the government company they have given a single limit, that is maximum government companies can accept 35%. Now if you want to accept from members 15% and from public 20%, you can do it. You can do it. For government companies the maximum limit is 35%. Now I'll come to the last section. So last section chapter is going to over? No, because sections are very less but rules are very much in this chapter. So many rules are there in this chapter, so you have to learn so much content in the rules only. There is a long definition of the deposits, the definition of deposit, which things are not covered in the definition of deposit, that we have to understand. But section wise there are only 4 sections, section 73, 76, 74 and 76A only. But 74 is also very useless kind of section because 74 is kind of transitional section. This section was applicable when this act came into force, but okay, institute has given us, we have to study. We have to study it. Yes or no? Yes, sir. So if I'll talk about section 74, section 74 says that suppose if deposits are accepted before commencement of Companies Act 2013, that means the companies have accepted the deposits as per the earlier act, that is Companies Act 1956. They have accepted the deposits as per Companies Act 1956. Got it? Got it, sir. But now the deposits were accepted before 2013 and now the 2013 came into force. Now what will happen? Now there can be 2 cases. First case, suppose on this date the Companies Act 2013 came into force. You accepted the deposits here. Your deposits got matured here, but at the commencement of this act, your amount is unpaid. This is case 1. This is case number 1. Your deposits got matured earlier, before the commencement of the act. You accepted the deposits before the commencement of the act. Your deposits got matured before the commencement of the act, but the amount is still unpaid at the time of commencement of the act. This is case 1. Or another case can be you accepted the deposits before commencement of this act, but your maturity date is falling after the commencement of this act, which means I just want to say at the time of commencement of this act, your amount is unpaid. Whether matured but not paid or whether they are getting matured after some later date, then you have to do 2 things. First, you have to file a statement to the ROC within 3 months of the commencement of the act or when the date of payment becomes due. Within 3 months of that date, you have to send a statement to the ROC. Whatever the case you must be following in that case, you have to file a statement within 3 months from that, any of the 2 cases in which you are following. And in the statement, you have to write amount of deposits accepted, sum unpaid and interest payable. And second thing, what you have to do is you have to pay that amount. And also you have to tell in that statement whatever the arrangements you have made for the repayment, and you have to pay that amount. Sir, what is the timeline to pay that amount? Commencement of the act, from that date you have to take 3 years, and your actual date of maturity, whichever is earlier, will be the last deadline. Up to that time period you have to repay that deposit what you have accepted before the commencement of this act. This is given under section 74A, but this is kind of very useless section, but you have to read it once because institute used to ask the unexpected things always in the examination. Section 74 subsection 2 states that NCLT may grant an extension. If you say that no sir, we were not having any plans, we were not aware you are coming up with the new law, we were like our maturity is too far away right now and we were having plans that we will repay later on. Now you are saying that you have to repay up to this date only, we are not having funds and all that. So they can ask extension from the NCLT. NCLT can give you the extension if NCLT thinks fit, and if the company fails to repay the amount or interest thereon within that time or extended time, within that time what I have told you, or if NCLT has granted you extension and if you have not repaid the amount of deposit even in the extended time period, then that company will have to pay a fine of minimum 1 crore, maximum 10 crore. And officer in default will be liable for the imprisonment up to 7 years, or fine will be applicable minimum 25 lakh, maximum 2 crore, or both will be applicable. Got it, sir. So if I talk about the section wise, sections are over. But now I have to explain you the rules. And rules are applicable for both of the cases. If you are accepting deposit from the member, section 73. If you are accepting deposit from the public, that is section 76. So whatever I am going to tell you now, from now onwards, I am going to explain you the rules. They are the common rules which are applicable in the case of member also, in the case of deposit also. So you can say they are the similar provision for section 73 as well and section 76 as well. So you need not to read it twice or learn it twice, 2 times. You have to understand it once only, and that will be applicable to 73 and 76 both. Sir, first point. What is the first point? That is validity of circular. Up to what time period your circular will be valid? Like for the issuance, for the raising deposits, you have issued the circular today. So if you have issued the circular today, up to when this circular will be valid? So it will be valid for a period of 6 months from the closure of financial year, or the date on which the AGM is held, or the last day up to which the AGM should have been held, whichever is earliest. You have to find out 3 dates. First, closure of the financial year. From the closure of financial year, you have to count 6 months. Second, your date of AGM. Third, your last date of AGM up to which the AGM could have been held. So I'll say financial year ended on 31st March 2022. Suppose company issued the circular for accepting deposits on 1st of December 2021. That is in the financial year 21-22. So if the company has issued circular on this date and the financial year ended on 31st March 2022, then on this date you have to count 6 months from the closure of financial year, that is 30th September. Suppose your last date of AGM up to which the AGM could have been held, that is 31st of August. Suppose actually the company held the AGM on 10th of August, so you have to take the earliest date, that is 10th of August will be the last date up to which the circular will be valid. So circular will be valid from 1st of December to 10th of August 2022. So that was the financial year 21-22. Now in the financial year 22-23 up to 10th of August, this circular will be valid. But if you want to accept after this, you want to accept deposits. Can you accept deposit? Yes, but you have to issue a fresh circular, that I told you in that conditions part. Oh. Second point, charge creation on the asset. It is necessary when deposits are secured, you have to create a charge, and that charge I have already told you that you have to create within 30 days of such acceptance. Charge should be in the favor of trustee. The amount of charge must cover the amount of deposits as well as amount of interest also. Amount of deposits also as well as the amount of interest also. The amount of charge must cover the amount of deposits also and the amount of interest also. The charge shall be created only on the tangible assets. Sir, in the charge chapter, you only told us that charge can be created on tangible asset, intangible asset. Yes or no? Now you are saying, sir, it is created only on the tangible asset. Charge can be created, Baba. Charge can be created on the tangible asset also, on the intangible asset also. Right? But in case of deposits, if company has accepted deposits and for that the charge is creating, the company is creating the charge. In that case, only the charge will be created only and only on the tangible assets, not on the intangible asset. They have asked a question also on this point by giving some values. And the market value of the asset must be assessed by the registered valuer. Then I'll say, what is the provision for appointment of trustee? Either one trustee will be there or one or more trustee. One or more trustee can be appointed. Written consent you have to obtain. Statement must be given in the advertisement that trustee has given the consent to act as a trustee. And you have to execute a deposit trust deed. Very important point you have to remember. You have to execute a deposit trust deed in the form number DPT 2. At least 7 days prior to the issue of circular or issue of circular in that newspaper. Now, what are the disqualifications of trustee? Who cannot be the trustee? Sir, if a person is a director, KMP, officer or employee in company, in holding company, in subsidiary company, in associate company. If the person is director, KMP, officer and employee in cash, then this person cannot be the trustee. Or if a person is a depositor in the company, he himself given the amount in the deposits, he cannot be the trustee because he will think only for himself only. Oh, if a person is indebted to this cash, indebted for what amount? Any amount, any single rupee amount indebtedness should not be there. Any single amount indebtedness should not be there. If you are indebted to company, associate, subsidiary, holding, you will be disqualified. You cannot be the trustee. the person has any material monetary relationship. Now, whether any limit is there, no, there is no such limit. You have to understand case to case that person has any material monetary relationship with the company, then that person cannot be the trustee. That person has entered into the guarantee agreement, guarantee arrangement. For example, company has accepted deposits and that person is the guarantor in that I am giving guarantee that if company will not repay the amount, I will give you the amount back to you. I will repay. So if you are the guarantor, you cannot be the trustee. And if a person is a relative of the person specified in point A above, that relatives can also cannot be the trustee of the deposits. The person who is director, KMP, officer, employee of cash, their relatives also will be disqualified. They cannot be the trustee also. Got it? Got it, sir. The trustee can be removed. Yes, trustee can be removed. If you want to remove the trustee, then you can remove the trustee with the consent of all the directors present at the board meeting. But if the company has to appoint independent director, that means if there are independent directors in the board of director of company, then at least one independent director must be present in that board meeting. That is very important condition. Sir, what about the meeting of depositor? Trustee shall call the meeting of the depositor when suo motu. If the trustee thinks so that I have to call the meeting of the depositor on the happening of some event, like there is any default happened or the interest of depositor is affected, then trustee will himself call the meeting of the depositors. Second point is, on the request of the depositor, if 1/10 of the depositor in value wise 1/10 depositor. For example, company have accepted the deposits of 100 crore rupees. So the people who are having at least 10 crore deposits, who have given 10 crore rupees in the deposits, at least those people or more than that can request for the meetings of the depositor. Then the trustee has to call the meeting of the depositor, and this request must be in writing and it must be signed by the people who are requesting. Then what is the register of deposit? At the registered office, company has to maintain a register of deposit also. Likewise, the company has to maintain register of member. They have to maintain the register of deposits also, in which they will write the name, address, PAN of the depositor. And if depositor is minor, then the guardian details, rate of interest, date of deposits, amount of deposits, all that they have to accept, all that they have to write down. Deposit repayment reserve, I have already told you that point, 20% point. Now, one more point you have to add to that point, that whatever the amount of deposit is maturing in the next financial year, of that amount you have to calculate 20%, and that 20%, at least 20%, you have to create reserve in this year. But you should understand that your DRR should not be less than the 20% of the amount of deposit maturing during this financial year. It means it happens now in this financial year, your deposits are maturing for a larger amount, for a higher amount. In the next financial year, your amount of deposits which are getting matured, that is very less amount, very little amount. If you will do that, if you will do 20% of that amount, that will be a very small amount. But during this financial year, you have created the reserve for this financial year in the last year. So this point is not saying you that, suppose I'll give you an example that by that you will be able to understand. Suppose in this year, your deposits are getting matured of 100 crore, right? And in the next financial year, your deposits are getting matured only for 30 crore. If in this year 100 crore maturity is there, so in the previous financial year you already created 20 crore DRR as per the provision. Yes, nothing is difficult in this now. Yes, sir. Now when you will come to this financial year, so you will see next financial year 30 crore and they will say 6 crore you have to create the DRR. So already you must be having 20 crore rupees in the DRR. And now you are having 6 crore in the DRR. As per the next financial year, you are just required to keep 6 crore in the DRR. So whether you can withdraw 14 crore rupees, no. Law says that, okay, you are following the law as per the next financial year, but you keep this thing in your mind that your DRR should not be less than the 20% of the amount maturing in this financial year. This point also you have to comply simultaneously. Then filing of the application form. Next rule is, whenever the company accept deposit, company can accept deposit only if the depositor applies through the application form, if it is submitted by the depositor. Application must contain a declaration that depositor is not paying the money out of the borrowing. That depositor will give a declaration that this is my own fund, I have not borrowed from anywhere and that funds I am giving to you. This declaration you have to tell. Deposit in the joint name. If suppose there is a person whose name is, let's say, Nitin, and his wife is Bijli. Sir, wow, So beautiful wife, and this is Nitin, and Nitin's wife is Bijli. Can they accept deposit in the joint name? Yes, they can accept deposit in the joint name, but the joint deposit holders cannot exceed 3. Institute have asked question on this point also, that 4 people are there, like husband wife are there, and they are having 2 children. That person want to accept deposit in the name of all the 4 persons. Can he accept deposit jointly in the name of all 4 persons? No, because maximum joint holder can be 3. And when the joint deposit are accepted, you may enter these points in your agreement or that deposit form, that jointly, either or survivor, first named or survivor, anyone or survivor. What does it mean, sir? It means that if you have written this clause, then at the time of maturity, these clauses will be operating only at the time of maturity. That means whenever the maturity will occur, anyone can come and get that deposits matured. Anyone means anyone, that depositor, their legal representative, anyone can come and get that deposit matured. Or if let's say 3 depositors were there jointly, and out of that 2 died in the tenure. In the meantime, 2 people died. So whosoever is the survivor, he can come and can get the amount on the maturity. First named or survivor, if you are having this clause, first named or survivor, then the person who is named first, that person can come. Or if he is not there, he is died, then the survivor can come and get the amount on the maturity. Either or survivor means out of that 3 joint holders, anyone can come or the survivor can come. And in the case of jointly, if you have written jointly maturity, then at the time of maturity, if you are 3 joint holders, all the 3 you have to come, and then you can get the amount at the maturity. But that is optional, that is may, it is not shall, it is may or may not contain. Then whether, sir, we can keep a nominee for our deposits? Yes, depositor may nominate, and after the death of depositor, the deposit shall vest in the hands of the nominee. Got it? Got it, sir. Deposit receipts. When the company accepts the amount from the depositors for the deposits, so within a period of 21 days from the receipt of money or realization of check, company issue the deposit receipts. And deposit receipt must be duly signed, duly authorized by the officer, and also state some particular like name, date, address, amount of deposits given, etc., etc. This all you have to write. And next rule is return of deposits. You have to file a return of deposits to the ROC in the form number DPT3 containing the particular as on 31st March of that year. Suppose today you are filing return of deposits. So today's content you need not to write in DPT3. The content must be of as on the date of 31st March of that year. And it must be deposited to the ROC on or before 30th June every year. And along with that, you have to pay the fees also. And this return includes particular of deposits, how much deposits you have accepted, the particulars of that, the amount which is not accepted, which is not treated as a deposit, the amount you have accepted, but that is not treated as a deposit. I'll tell you a very big definition of this right now after some time, or both you have to tell the particular, but all this is not applicable in case of a government company. Then there is another rule, very small rule, disclosure in the financial statement. Whenever a public company accepts deposit from the directors, then they have to disclose it in the financial statement. And if it is a case of private company, you accept the money from director or their relatives. Same provision relative to clause 77 given in chapter 1. If you accept deposit from these people, you have to disclose it in the financial statement. Then next point is alteration in the terms and condition. After the issue of circular and deposits are accepted, the alteration can be done in the terms and condition, but make sure that terms and condition can be altered in a manner which should not be detrimental to the interest of depositor. Sir, you have written no alteration. You have written no alteration, nalayako. You have written no alteration, sir. You are little bit nalayak. You understand nalayak? Yes, sir. We understand nalayak. So, no alteration in the terms and condition. I want to say that terms and conditions should not be altered in a manner which is detrimental to the interest. It can be altered, but it should be altered in a manner which should not be detrimental. That should not harm the interest of investor. That is what I want to say, the interest of depositor. Then penal rate of interest is given in next rule. If a company fails to repay the amount of deposit on maturity, then the company has to pay the interest also at the rate of 18%. Whatever the fine wine, that is applicable, but the company has to pay the 18% per annum interest also. And what is the punishment for contravention? Company and officer will be liable for a fine up to rupees 5,000, and if the default continues, rupees 500 per day up to the day the default continues. And what is the, sir, ceiling on interest and brokerage? how much maximum interest company can pay. The eligible companies are permitted to pay the amount of interest or brokerage. Sir, why brokerage? Brokerage means because no one is aware na company is accepting deposits and all that. So company authorize some people as the broker, and those people will bring the people to the company. Those authorized brokers will bring people to the company that they are ready to give you the deposits. For that, company pay the brokerage. So amount of interest, amount of brokerage should not exceed the maximum rate which is prescribed by the RBI for the NBFC. RBI has prescribed the rate for NBFC. The rate RBI has prescribed for the NBFC, that rate should your rate should not exceed that rate which is prescribed by the RBI. And brokerage shall be paid only to that person who is authorized by the company in the writing, not to any person that I'll go to the company, I'll go to Reliance that I have brought this person as a depositor, give commission to me, give brokerage to me. You will not get any brokerage. If company have authorized you in writing, then only you will get the brokerage for bringing the investors to that company. Right? Now I'm going to tell you 3 very important rules. The last 3 points, but they are very important. They are not last 3 points of the chapter. They are last 3 points of the rules. Then we will discuss a last definition, that is definition of deposits. Now, sir, what is tenure of deposits? The company is not allowed to accept deposit which is repayable on demand. You understand repayable on demand, that whenever the depositor will come and say, I am having very small wife, small children, they are not able to survive, please give me my money back. It's not like that. We don't care about your small wife, small children. We don't care about them. You cannot ask any time for the repayment of the deposits. The deposits are never ever repayable on demand. Got it, sir. So company is not permitted to accept or renew any deposit which is repayable on demand. But deposits can be accepted for a minimum period of 6 months, maximum period of 36 months. However, company will say, sir, we need funds only for very short term. We need funds for 4 months, 5 months only. So whether company can get for 4 months, 5 months, yes, there is an exception. The tenure of deposit can be minimum 3 months. That means minimum tenure is always 6 months. But if you want to accept for a period less than 6 months, you can accept, but that can in no case, it can never be less than 3 months. It means in any case, the deposit's minimum tenure is 3 months only. In general, the minimum period for deposits is 6 months. This is exception case that you are accepting the deposit for a period lesser than 6 months, but it can never be lesser than 3 months. That is what I am saying. If you want to accept deposit for a period less than 6 months, you can accept, but that tenure should not be less than 3 months. 3 months, that must be minimum 3 months, 3 months or more. And for that period, the period which is less than 6 months, for that period, whatever the amount you are accepting, that should not be more than 10% of that aggregate of paid up share capital plus free reserve plus SPA. If you are accepting deposits for minimum 6 months and maximum 36 months, a general tenure, then the limits, whatever I have told you, that is the applicable limit. But out of that limit, you just see the question. One question I have explained this of this part in the writing practice. Please watch that question. That is some question of a plan A, plan B. You will get that question. That is very important question in the last some kind of like, I think previous exam question it is, and they have asked it in the examination. Plan A, plan B, they have accepted deposits of 2 plans. That is a very good question on this part. You have to read it, please. Right. So in general, if you are accepting that, you can accept as per the limits. But if you are accepting for a period lesser than 6 months, then you can accept the deposit, but the 2 conditions you have to fulfill. Condition 1, periods can be less than 6 months, but it cannot be less than 3 months. Or I want to say that it must be for minimum period of 3 months, 3.5, 4, 5, 5.5, like that. And for that exceptional period, whatever you are accepting deposit, the deposits for that period cannot exceed 10% of the aggregate of paid up share capital and free reserve and SPA. Then the next very important point, very important point, that is premature repayment of deposit. Okay, sir, we have accepted deposits, let's say for so and so time period, whatever the time period. Can a person come before maturity and request the company that yes, please, there is my small wife, small children, little wife, little children, they are hungry at the home and they are not able to survive, please give my money back, please, I am requesting to you. Can he come to the company and request like this? Yes, he can request like this, and company accept that. If company accept the request, company will be ready to pay back the money to that person. So premature repayment can be done. Premature repayment can be done, but that person has to come after 6 months of giving the deposit. You cannot do like that. Today you have given the amount of deposit, next day you come to the company and say, give my money back. It's not like that. Then it is not allowed. Premature repayment can be done, but only after the 6 months. Before 6 months, premature repayment is not allowed at all. After the 6 months you can come, but before actual maturity, depositor can request to the company for premature repayment. But in that case, there will be a penalty of 1% interest. There can be a penalty of 1% interest, and the interest will be payable to you for the period for which the deposit has actually run, but 1% will be deducted. Now, how this and this will be calculated? Let me give you an example. For example, you were the person who has given the deposits to the company. Company said, if you will give the deposits to us for 1 year, we will give you 9% interest. If you will give the deposits to us for 2 years, we will give you 11% interest. If you will give us the deposit for 3 years, we will give you 12% interest or 13% interest. We will give you 13% interest. This person has given the deposit for 3 years. So accordingly, he was eligible to get 13% interest. For 3 years, 13%. I am not saying for first year you will get 9, for second year you will. There are 3 plans. For 1 year plan, you will be getting 9% interest for that year. If you will invest in 2 year plan, you will be getting 11%. If you will invest for 3 years, we will give you 13. Got it? This person has invested for 13-year plan, 13% plan. That is for 3 years, right? Now, after 2 year and 4 months, he came to the company and requesting the company, please company, give my money back. Now it is 2 year, 4 month. The fraction of months you have to consider, like if it is up to 6 months, it is less than 6 months. Yes, it is less than 6 months. Then you have to ignore it. But if it is up to 6 months or more than 6 months, like in my case, he came on after 2 year, 4 months. So the part of the year is 4 months. That is less than 6 months. Ignore it. So the year will be 2 year, and this 2 year interest rate will be given to him. That means he will not be getting 13% interest. He will be getting 11% interest minus 1%. 2 year interest rate will be applicable to him. Sir, suppose if he came after 2 year, 9 months, then what will happen? Then this fraction of year is 6 months or more, then it will be rounded off to upper side. It will be considered as 3 years. So 3 years rate will be applicable, that is 13%. And from that 1% penalty will be deducted. So he will be getting 12% interest. Oh, and sir, what about if he exactly come at 6 months, like 2 years, 6 months? I said, no, you have to consider it 3 years. If it is 6 months or more, part of the year is 6 months or more, you have to go to the upper side. If it is the part of the year is less than 6 months, you have to ignore it. Sir, suppose that person comes after 1 year, 3 months, then what will you do? It will be considered as 1 year rate. So 9% rate will be applicable minus 1% penalty. So he will be given 8% interest. Sir, I am having one more question. That suppose that person comes after 2 years, 4 months. Okay. So you are saying 2 year rate will be applicable. Yes, that is 11%. From that 1% interest will be deducted. Okay, 10% he will be getting. So 10% interest he will be getting for 2 years or 2 year, 4 months. 2 year, 4 months. Because the amount was given for this period, na? Whatever this 6 months fraction you are discussing, na, you are doing. This treatment is only for the ascertaining the rate of interest. The interest will be paid for the actual period. Got it? The 6 month calculation what you are doing, that is only for the ascertainment of the rate of interest, which rate will be applicable. Out of that we will deduct 1%. Okay, sir. This is given here only. But the reduction of that 1% is not applicable in 2 cases. First, if the deposit is prematurely repaid due to the war risk or for the benefit of family of air, naval and military force, and where the premature repayment is done to reduce the total amount of deposit within the prescribed limit. Now, what is this point? I have told you that your maximum deposit cannot be more than 35% of paid up share capital plus free reserve plus SPA. Yes, sir. Now, suppose as per the previous financial year, your balance sheet stood at this date on 31st March, let's say 2024. Company accepted deposits as per the values given in this balance sheet, and company accepted deposits within 35%. In this financial year, suppose company has buybacked some shares, company has reduced the share capital, free reserves are reduced, security premium is utilized, so many things are done. And because of that, and this deposit was accepted for a period of 3 years. And now in the next financial year, suppose this aggregate was 20 crore, 200 crore, let's say. So out of that 35%, you can accept deposit of 70 crore. So let's say company have accepted the deposit of 70 crore. But now on this balance sheet date, this deposit they have accepted for 3 years. Now on this balance sheet date, suppose the aggregate amount of paid up share capital, free reserve and SPA is coming only 100 CR. And now if in the balance sheet it is looking like 70 crore deposits are there and your aggregate is 100 crore, it will be apparent that there is some non-compliance. So company has to reduce its deposits, and company will say that we are giving back the amount to the depositors because we have to bring our deposits back within the limits. So if in this case the company is doing the repayment, premature repayment, in that case there is no fault of depositor na. So why we have to deduct 1% interest? Then in that case interest will not be deducted, right? And the last rule is that suppose there is a depositor whose name is Purnima, and she has deposited the amount for deposit 36 months at the rate of 12%. Now 30 months has been elapsed, and in the meantime the company comes up with a new deposit that we will pay interest 14%. Purnima be like, if I'll be having money at this time, if I would be having money at this time, I would have invested in this deposit. Why I am getting 12% interest? I would have earned 14% interest. Company has done fraud to me, blah blah blah. So if a person wants to switch the deposit, can he switch the deposit? Yes, he can switch the deposit, but in order to earn a higher rate of interest. But there is a condition that the new deposit tenure must be greater than the remaining tenure of your existing deposits. Then only it makes sense. Suppose the new deposits company are coming up only for 2 months. Now Purnima is thinking, here she could have earned 12% for 6 months. And she want to say, no, I want to earn 14%. But 2 months is there na. Why you are switching it? You could have earned here only better. So why you are switching? So switching is allowed, but only and only in that case when the new tenure of new deposits must be more than the existing remaining amount of the remaining tenure of the deposits. Got it, sir. These are your rules of the deposits. I have given that interest calculation example over here. If you want to read it, you can read it. I have explained you that. I have given an example of that also, right? Right, sir. Now we have to understand the last topic only, that what is deposit and what is not covered in the definition of deposit. If you will understand this definition, your entire chapter will be over. So you just read it very, very fast, and then we will start with the definition of the deposits. So now we are going to start the definition of deposit. That is very, very important because Institute very frequently asks the questions from this topic, that what amount is not considered as a deposit. They have asked the question in the May 25 also. They have asked the question in the September 25 also, and in the previous examinations also. They usually ask the question from this point, which is not considered as a deposit. Following amounts, out of that following amount you have to tell, like they must be giving you 2-3 points, and for every point you have to give the reasoning that so and so amount is considered as deposit, so and so amount is not considered deposit, not considered as deposit because of so and so reason and so point. So there is a very long list. There are some points which you have to cram. There are some logical points which I'll explain to you. So there are some points you have to cram, that like amount borrowed from the central government, state government, local authority, or any other source. You can accept amount from any other source, but the guarantor is central government, state government. or you have borrowed the amount from the statutory authority, that is not considered as a deposit. If you have received the amount from Udi Baba, you have received the amount from, all this you have to learn. This is very cramming part, dry topic, dead topic. If you have received the amount from foreign government, foreign bank, multilateral financial institutions, international financial corporations, Asian Development Bank, Commonwealth Development Corporation, International Bank for Industrial and Financial Reconstruction, foreign government owned development financial institution, foreign export credit rating, foreign export credit agencies, foreign collaborators, foreign body corporates, foreign citizens, foreign authorities, or PROI as per FEMA. This only you will be able to understand that foreign authorities or like PROI as per FEMA. Yes, this is something familiar to us. We are aware of this point. The rest everything you have to learn and cram. So if you are receiving any amount from these people, it will not be considered as a deposit. If you receive any amount as a loan from banking company, SBI, any of its subsidiary, banking institution notified by CG, or any cooperative bank, that will also not considered as a deposit. If you received the amount from financial institution notified by CG, regional financial institutions, like there are some RRBs, Regional Rural Bank, Land Development Bank, NABARD, you must have heard about it. Insurance companies, scheduled bank, if you receive amount from them, it is not considered as deposit. Any amount received by a company against commercial paper or other instrument issued by as per the guidelines of RBI. So if you will accept the amount as per, like if you issued the commercial paper and accepted the amount, that is not considered as deposit. Any amount received by a company from another company, that we will say inter-corporate loans and advances. If a company is giving loan to some other company, that will not be considered as a deposit for that company. Point 7, yes, this is very important. From now onwards, the points are important. Sir, that means you want to say that institute do not ask question from these points. They have asked question, but that is very direct question. In these points, you have to apply your mind because these are some technical points. These are some logical points. You have to understand it. Got it? Got it, sir. Point number 7 says that it is not section 7, it is point 7. That amount received pursuant to an offer made as per this act. Suppose company has made an offer for inviting the people for subscription of securities and people have paid you the application money and you have not done the allotment. So far as that amount is to be allotted towards the allotment, till then it is not considered as deposit. But after that it will be considered as a deposit. So suppose here it is given an explanation that application money received here. Within 60 days you have to make the allotment. If you have not done the allotment, 15 days will be given to you for refund. Whenever the application amount you have received and you have not allotted, and even if you have not refunded, up to this period the amount will not be considered as deposit. But if you have not refunded that amount within this refund time period, then from the next day itself, that amount will be considered as a deposit. But there is very important explanation here that suppose there is some deposit, there is some person who has given you the amount of application money, right? But you have not allotted the securities to him. So accordingly, as per the law, you must have refunded the amount to him within a period of 60 days, within a period of 15 days from the expiry of 60 days. But the company has not refunded. What the company has said to that person, that you are our customer also. We are required to recover 1500 rupees from you. And company has settled that amount from that amount. Company has settled that amount from that amount. Whether it will be considered as a refund? No, it will not be considered as a refund. Please keep this thing in your mind that it is clarified that amount adjusted toward any other use is not as a refund. Amount adjusted is never considered as a refund. Refund means you have to repay the money back to that person. If any amount is recoverable from that person, the company cannot adjust that amount and say, oh, we refunded the amount. No, it is not refund. You have to actually refund the amount. Got it? Got it, sir. Then the next point is at the time of receipt of deposit, if amount is received from a person who is a director of the company. In case of a public company, first understand the public company. If there is a public company accepting deposits from the director, accepting amount from the director, or if it is a private company accepting amount from the director or relative of director, then there is one condition. There are two conditions. Condition number 1, they must give a declaration that the amount they are giving, it is from their own fund, they have not borrowed it. And second, you have to give the details in the board report. If this condition is satisfied, then amount accepted from these people will not be considered as a deposit. If they have not given the declaration, we will consider it as a deposit. In this definition, now you have to think like if this happens, then only the exemption is allowed from the definition of deposit. In case if any single point is changed, it will be considered as a deposit. Got it? Is it clear to you what I'm saying? You just understand that I'll give you some combinations. If this happen and this happen and this happen, if all these three things align together, then only this amount will not be considered as a deposit. So if it is a public company, amount accepted from the director has given the declaration and it is disclosed in the board report, then that amount will not be considered as a deposit. Then come to the next point, that is, if the company has raised the amount by the issue of bond or debenture and that is secured by first charge. What is first charge? First charge means like there is a building of a company. Let's say the value of the building is 1000 crore. Company has taken a loan from one person. I am not explaining this point. I am explaining you first charge. What is first charge? Company has taken a loan from, let's say, SBI, and company has created a charge in the favor of SBI for that 1000 crore property, but the loan was only for rupees 50 crore. So value of the property is so high than the value of loan. Now the company is saying that we will take another loan also. Now the company is taking loan from the HDFC also for 250 crores. So company can keep the same asset charge to that HDFC also. Yes, company can keep the asset under security to that HDFC also. But which lender, who will be having the first charge? So it will be depending upon the company. First charge means who will be having the first right over that asset. Suppose later on, if the company makes the default and company will not repay the money, then who will be having the first right to recover his amount? SBI. First charge is of SBI and second charge is of HDFC. And sometimes what happens now, company says that we create the pari passu charge. Pari passu means SBI is having first charge, HDFC is having a pari passu to first charge. Pari passu means of the same rank, of the equal rank. That means they both will be treated as the first charge holder. So if the company has issued the bonds or debentures which are secured by first charge or secured by pari passu ranking first charge on the assets of the company, only on the tangible asset charge is created, only on the tangible, not on the intangible asset, then that kind of bond or debenture shall not be considered as a deposit. Or second point, in the 9th point itself, there are two different points. Or if a company has raised funds by the issue of bond or debenture, which are compulsorily convertible into shares of the company within 10 years, then that amount will not be considered as a deposit. That amount will not be considered as a deposit, provided in this case amount of such bond or debenture shall be less than or equal to market value of the assets. Means market value of the assets must be higher. Then next point, amount raised by the issue of non-convertible debenture. It should be a non-convertible debenture. It must be unsecured and it must be listed. Then that amount will not be considered as a deposit. Then next point, if amount is received from an employee, but that amount must be received from employee not exceeding his annual salary. If that amount is exceeding his annual salary, we will consider it as deposit. Amount must be received from employee. It must not exceed his annual salary and in the nature of non-interest bearing security deposit. That any interest should not be payable to that employee. It is a security deposit, but that interest no interest shall be payable on that security deposit. It is non-interest bearing security deposit. Sir, suppose amount is accepted from employee and within the annual salary amount, let's say his annual salary is 1 lakh rupees and the company has accepted an amount of 50,000 rupees from the employee as a security deposit, but that is interest bearing. Whether it is accepted, whether it is considered as a deposit, yes. I am saying you now, this happens, then only the exemption is given. Any amount which is non-interest bearing amount received and held in trust. Company is holding that amount as a trustee and that is non-interest bearing, not considered as a deposit. Amount received by the Nidhi company, not considered as deposit. Amount received by the way of chit funds, not considered as deposit. Amount received by a company from alternative investment fund, domestic venture capital funds, infrastructure investment trust, real estate investment trust or mutual funds, it will not be considered as a deposit. Any amount received by the company under collective investment schemes. What are collective investment schemes? They are like mutual funds but are not mutual funds. Mutual fund pool the money from the people, invest into the market. Collective investment scheme is like that only. They collect the money from the people, invest into some defined objective, but they are not allowed to invest into that area where mutual fund will invest. They cannot invest in that area. Amount provided by the promoter. Very, very, very important point that institute always ask in the question in the paper. Suppose the company went to the bank and to the bank they are asking for loan, that please give us please give us some loan because that is required for our project. Bank says we will give you the loan, but on one condition. Ask your promoter that they will give you some unsecured loan, then only we will give you the loan. So if the company has received any amount from the promoter or from the relatives of promoter, and that amount is by the way of unsecured loan, and because of a condition imposed by the lending institution, then that kind of amount what you have received from the promoter or from the relative of promoter, that will not be considered as a deposit. But make sure that will not be considered as the deposit only till the time when the loan of this lending institution is not repaid. Once the loan of this lending institution is repaid, then thereafter you have to repay this back also. If you will not repay, we will consider it as a deposit now. Got it? Got it, sir. This is written over here. So amount provided by the promoter of the company. Here they have written promoter, but later on they have explained that by the way of unsecured loan as per the stipulation. Stipulation means condition imposed by the lending institution. Loan is given in pursuance to a condition imposed by the banking or lending institution. Loan can be given by the promoter themselves, relative, or both can give. Exemption under this clause is available only till the loan of the lending financial institution is repaid. And the next point, here the amount is given. In all the points but you have read, no amount is given, but here the amount is given. Sir, yes, here the amount is given. If you have received amount of rupees 25 lakh rupees or more raised by a startup company. So you are a startup company. You are a startup company and startup company has raised 25 lakh rupees or more by a way of convertible note. What is convertible note? Means that amount will be converted into equity share later on, or it will be repayable. There is a convertible note. So if a startup company has raised amount of 25 lakh or more by way of convertible note, that it will be repaid within a period of 10 years or convertible into equity share, and you have raised this amount in a single tranche, you will be converting this repaid within a 10 years in a single tranche. You will be like converting it into the equity share. Then that kind of amount will not be considered as a deposit. The amount of 25 lakh rupees or more must be there, and that is raised by a startup company by way of convertible note, that it will be repayable within 10 years or convertible into the equity shares in a single tranche. Then it will not be considered as a deposit. And the last point is having 6 points in itself. Amount received by a company in the ordinary course of business. If a company receives any amount in the ordinary course of business, that will not be considered as a deposit. Although it will look like a deposit, but it will not be considered as a deposit. For example, if company receives any advance for the supply of goods or services, provision of services, that we will give you this service within 365 days, we will provide you these goods within 365 days, provided that amount shall not be considered as a deposit, provided if advance is subject to the legal proceedings. Let's say some disputes arise and there is some legal proceeding going on, then 365 days limit shall not apply. If the advance amount you have received for immobile property to be supplied, now let's say now company has received amount for advance for immobile property, that we will supply you the immobile property, then the amount must be adjusted against that immobile property only. We will not consider it as a deposit. If you will adjust that amount for some other use, you have received that amount as an advance that we will give you the immobile property, but later on the company is adjusting that amount to some other use, then it will be considered as a deposit. If you will adjust that amount against that immobile property, then it will not be considered as a deposit. Third, security deposit from supplier for the performance of contract. Sometimes what the big companies do, they appoint some small like kind of suppliers. Like suppose there is very huge like business and they have hired some very level wise very small supplier. Now they are afraid whether he will be performing his duties or not. So they ask them that you should deposit some amount with us, that you will perform your performance. your activities, your supply you will do, your service you will give. When you will do that performance, we will return that amount to you. We will return that amount to you. So if the company has received any such security deposit, it will not be considered as a deposit. If the company has received advance for the supply of capital goods, then the amount will not be treated as a deposit. If the company has received the amount for future services, that we will give services in future to you. For example, sometimes you see, you go to the showrooms and they say that you must pay this and this amount, your warranty will be extended for 5 years, 10 years and all that. So if you have received any amount, company has received any amount for which services are to be provided in future, like warranty, maintenance contracts like that, then you have to check the period of providing such service, period as per the normal practice of industry, or 5 years from the acceptance, whichever is less. You check what is the normal period what your industry follow, that period, or 5 years, whichever is less. You will arrive at a value. Let's say your industry practice is 8 years. So 8 years or 5 years, whichever is less, 5 years. Now, if the company accept that amount for 5 years or less, then that amount will not be considered as a deposit. Then that amount will not be considered as a deposit. And if you have received any advance and that is allowed by the sectoral regulator, then it is not considered as a deposit. And if you have received the advance for subscription towards the publication, you have received that we will give you the publication material, print or electronic, whatever it is, it will not be considered as a deposit. But for point A, B and D, what is A, B and D? A, that supply of goods and service. B, that is advance for immovable property and advance for supply of capital goods. In case the amount becomes refundable, and there was some like approval was required to do that transaction, but that approval got denied, the authority didn't give you the approval, then the amount become refundable. You just refund that amount within a period specified. If you will not refund that amount, then it will be considered as a deposit. And by this, beautifully, you have completed the entire chapter of the deposits. So do like this video, do share your feedbacks in the comment box, please, and do share this video with all your friends. Whatever chapter you want, whatever you want from me for your CA interlaw preparation, you can write down in the comment box. I'll definitely consider it and I'll try to provide it to you, right? So if you have liked the lecture, actually, so you have to like the lecture so that it will give me that feedback, it will give me that motivation also that yes, you are actually liking the lecture and you should share this lecture with all your friends, right? So for these board notes, you can join the Telegram channel. You will get the board notes from the Telegram channel itself, and yes, do subscribe the channel. You will be getting a lovable content on this channel, right? So see you in the next lecture with a new chapter. Until then, keep studying and keep working very, very hard as someone somewhere is waiting for your success. Thank you so much. Take care. Tata. Bye bye. Keep working very, very hard as someone somewhere is waiting for your success. Take care. Bye bye.